Welcome to Market Matters. I'm Sulhi Azman, joined by Khoo, Chuang. Companies in the news today, we have LBS Bina Bhd, where they closed unchanged at RM1.38. Now, LBS Bina, right, it's controlled by Tan Sri Lim Hock San, and today they had a media briefing to tell the outlook for 2016.
Yeah, they basically tell the media that it was good news. They met their 1 billion ringgit sales target for 2015.
Correct.
They've set another one for 1.2 billion ringgit in 2016, saying that, and this is very important because this comes from Lim Hock San, in fact, Tan Sri to you and me, controlled by the Lim family, of course, the five brothers. But they've said that the worst is over for the property sector in Malaysia. They've said that the GST impact has been priced in. So that's very interesting.
This is one of the very few property companies who acknowledge that GST is actually quite good or boost for them. But anyway, you are right, they are going to launch 15 projects worth 2.5 billion ringgit, and they are going to achieve 1.2 billion ringgit in sales. I think it seems to be a little bit more, do you think it's a bit more optimistic?
Well, they seem to be, because as you pointed out earlier, GST has hit demand for properties in 2015.
Everybody's been complaining.
Everything, but according to him, he reckons that the GST effect has been priced in. From an earnings perspective, LBS Bina have had their Q3 results. Revenue was down, but profit after tax is up by 26%, both at quarterly level and at the 9-month level up by 14% on the profit after tax. So clearly they're doing something at the net level.
Yeah, maybe they are doing some very good cost management
issues and stuff like that.
Yes, correct. And also LBS Bina, they have about 1,000 hectares of land bank in Malaysia, and there's an estimated potential GDP of 21.5 billion ringgit, which is pretty good for mid and growing property companies as well. And yeah,
interesting because in 2013 they did 645 million ringgit in sales. In 2014, or rather 2015, they did 1 billion ringgit in sales. That's a nice 65% jump.
Yes.
And then in 2016, which is this coming year, they forecast a 20% increase on that revenue target to 1.2 billion ringgit. So, although growth is slowing down at the top line level, they're growing on a bigger base. So I guess that's quite interesting for this small developer.
It is, if you look at the sales as well, 85% will contribute to projects in Klang Valley, and the balance 15% by Johor and Penang. And if you, they also have some presence in Malaysia and China. So to take it home all the way, 3 reasons for this is that it has beaten 2015 sales target of 1 billion ringgit, and it has set a new sales target of 1.2 billion ringgit for FY16 on the back of 15 projects launched worth 2.5 billion ringgit in GDP. And they also say, very interestingly, the worst is over for property sector as GST effect has been priced in. Moving on to Broker's Call today, we have Econpile Holdings Bhd. The share price has been very resilient, Chuang. Since listed barely in June last year, share price has risen by 96%, or almost double from IPO price of 54 cents to close up 4% or 4 cents, very nicely, to 1 ringgit and 8 cents.
Yeah, it's founded by the Group Managing Director. Is it The or The?
I think it's
Te Cheng Eng in 1987. This is a construction company. BIMB reckons a target price of 127, which is about 23 cents. In fact, no, 15 cents from here. AmResearch also says it's a buy. Target price of 150. That's more bullish than BIMB. Basically, I think there's a lot of optimism that these guys will benefit from the Bandar Malaysia projects going forward.
Correct, and already they also have benefiting from projects in Menara Warisan, the KL118. I'm not sure whether they have bagged or not, but yesterday they announced that they have secured a piling contract from Ahmad Zaki Resource Sdn Bhd, part of Ahmad Zaki Resource Bhd, worth 20.3 million ringgit. And interestingly, Chuang, I've been following this company, right? The company seems to be bagging, sometimes quite big job, quite significant, sometimes quite sizable jobs, throughout. So whatever the tender, right, they managed to get it successfully. The success rate is quite good for them.
Well, connections and of course quality of job, because they've done, they will be doing Menara KL118, they'll be doing the Bukit Bintang City Centre, they'll be doing TRX as well as Bandar Malaysia. So, these are interesting jobs, and I think the workflow at this point in time, they've already secured 236 million ringgit worth of jobs for 2016 financial year to date. That's 75% of analyst expectations, and in fact BIMB's expectations. So that's 3/4 of the way through already.
And if you look at the net margin, right, it has continued to expand to 14.3% in 2016 from 6.5% in fourth quarter of last year, which is quite interesting. And AmResearch today says that they like Econpile for strong track record as a leading piling specialist, continued improvement in margins, and sustainable contract flow on healthy demand.
A leading piling specialist, I like that term. But the margins from that standpoint, construction companies don't have very healthy margins. Usually low single-digit margins, but 14.3% in Q1 16 is not bad at all.
It is not bad at all, given the current challenging economic situation as well, where the margin seems to be compressed and contract. Anyway, just to take home all the way, Econpile Holdings Bhd, they managed to secure 20.3 million ringgit worth of contract from Ahmad Zaki Resources Bhd, or Ahmad Zaki Sdn Bhd, the subsidiary of it. That's all we have today, folks. Thanks for joining us. I'm Sulhi Azman. Joined together by Khoo Chuang. For more information, you can always log into our website www.theedgemarkets.com or grab a copy of The Edge Financial Daily or go to our website. Good night and good luck.